Hi there, welcome to GrainTV. It's Tuesday, May 3rd, a really red day in the grain markets with a lot of losses. Let's take a look at the grain edge trading platform and see where we closed. In Chicago, corn losing 12 cents a bushel, beans off 13 3/4, and wheat in Chicago losing 17, Kansas City losing even more, giving up 18 cents on new crop July futures. News today was all over the place. We had, let's start first of all with late yesterday afternoon after the markets closed. Argentina, their weather agency there, said that they expected crop losses in Argentina to approach 9 million metric tons for soybeans. That compares to previous estimates which showed only a 5 million metric ton loss, although at this juncture it's really just speculation because no one's really doing any hard survey work and farmers are still waiting to get into some of those areas that have been badly flooded. But that got the market excited overnight with July beans jumping up to 10.57. But when we got into the day, things just started to deteriorate. Beans selling off, getting down to 10.25 before closing around 10.30 because of some of the other lingering factors. First of all, Brazil's real has started to do an about face after strengthening since March. We are now seeing some of that premium in the Brazil real come back. We were off 1% yesterday, off 2% today, so making that a 3% loss in the Brazilian real in the last two trade sessions. The other thing was some news from Informa that we'll get to in a bit, but let's turn our attention now and talk a little bit about wheat. On Monday, USDA's crop progress report showed 61% of the wheat crop for winter wheat in good to excellent shape. That's up from 59%. Today we got confirmation from the first day of the Kansas wheat tour that said northern Kansas looks really good, better than average yields, and those late rains that we had in the last few weeks have really bolstered the crop prospects, although there is the potential for some rust damage on that crop. In outside markets didn't help the grains either. We had crude oil trading down again sharply, $2 or for 2 days in a row. We were off as much as $1.20 a barrel on crude oil. We bounced back a little bit late in the day. The API crude stocks number that came out was not overly supportive for the bulls in the crude camp, but on the other hand, we traded off from the highs in the 46.50 range down to 43, the low $43 range in the last 2 days. So it's not surprising that even somewhat bearish news in those API crude stocks were sort of covered in this short covering rally. The real news though will be tomorrow when EIA announces their official crude stocks number, and that's expected about 9:30 Central Time. In the US dollar, we had a reversal from the last 7 days or last 6 days of selling on the US dollar. We saw the US dollar actually gain a little bit, nothing to write home about, but it was yet again not supportive for grains. Let's turn our attention now to Informa's crop numbers, and these were not again supportive for any sort of bull move in the grains. Informa came out with only a marginal decline in Brazil's bean crop, 100.1 versus 100.5. That's not terribly surprising. We know their crop's going to be large. But the real bad news for bulls was the Argentina number that came in at 55 million metric tons versus 59.5 that they had previously forecast. Again, keep in mind we're flirting with estimates out there that are 9 million metric tons lower than where we were a month ago. So when Informa comes out and says we're only going to see a 4.5 million metric ton crop, that gets the bulls heading for the sidelines, which they did quickly. In corn, again, not terribly supportive because it wasn't as big a drop in the Brazilian corn number as some analysts in South America have been pointing to, so yet again, there was not much to write home about. Let's turn our attention to the technicals, and when we look at December corn, yes, we are in an uptrend, but this uptrend is coming into great peril right now. We traded down sharply today, getting into that 383, 384 range, closing a little bit above those lows, but I think that's going to be a pivotal point. If we penetrate below that 383 mark, we have an underlying support line here. We have a 50-day moving average here. Both of those things need to be supportive to keep this bull market intact. Otherwise, it might be time to head to the sidelines for the bulls. The other thing that's going to be dragging down corn is wheat, where we're seeing good reports from Kansas, good reports from crop ratings. Everything is looking favorable for the wheat crop, and so without any sort of export stimulus, which we haven't seen in wheat, that's going to be real hard to keep 450 to 460 wheat prices, and so that has the potential in the near term, I think, to drag corn along with it, in conjunction with the underlying problems in the corn market. So that's all we got today on Grain TV. It is certainly shaping up to be an interesting spring and summer in the grain markets. If you are interested in getting a trading account with GrainHedge, by all means visit us online at grainhedge.com to learn how we can help you in your own grain marketing situation. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.